Hello, Oracles. Good to see you guys again. Sorry about last week. We have some snow here, so my schedule's been a bit off. So I've had some snowstorms. We've had inventory going on at work, so I wasn't even sure if I was going to be on tonight. But I'm working closer to home. We got out in time, so here I am, and I'm glad I can spend the evening with you guys. So super excited to be on again. Next week, I'll keep you guys posted. I will be in South Carolina next week. So if I can be on, I'll let you guys know. Just not sure at this time, but yeah. So exciting week going on with Tesla. If you guys saw my video on Monday about the charts, I'll dive back into that a little bit today. Sorry, straighten this out here. Maybe I don't know. But we'll dive back into the charts again today, just to kind of look at what transpired since Monday. And basically what I said was going to happen has happened so far. So we'll go into some of that as well, but I'll give you guys a few minutes to get on. What's going on, Lang? How you doing? Hello, Colin. How are you? Let me see. Yeah, I was looking at the charts. I haven't even had a chance, just with work and everything going on. I haven't had a chance to really follow much. So kind of gonna get myself refreshed tonight with you guys as well. So it'll be nice to look and see what's going on in the charts. And again, just to reiterate, when it comes to the charts, what's going on, Alex? When it comes to the charts, obviously for long-term investors, it really doesn't matter. And like I look at a lot of the super, Uber Tesla bulls that are out there, like Peggy, one of my favorites. I love Peggy. But they're constantly following the day-to-day movements of the stock, wondering why it's up, why it's down. And there's nothing wrong with that. They're all long-term holders. But what I like to do on this channel as well is kind of go into the charts and explain why some of the movements are going on. But when you're a long-term investor, it really doesn't matter. You're looking at 5 years. What happens day to day is irrelevant, especially when it comes to Tesla, because it's so much sentimental movement that's going on in the stock that very little of the near-term stuff is based on fundamentals. The massive swings we see up and down, most of that is all based on sentiment, and the fundamental stuff is the underlying value that we're going to see in the long term. But there's a lot of future stuff that gets priced in very rapidly, and then over time it kind of fizzles out, and it just kind of sets the bar super high for Tesla. And obviously if they can meet that, like Palantir is doing right now, Palantir is meeting, the bar has been raised. And I still think Palantir is extremely overvalued at the moment. Not to say they can't grow into that valuation, but similar to Tesla, they need to grow into the valuation that they're at. They're not currently, bringing in the revenue and the bottom line numbers to justify the stock price where it's at right now. So you have your options of either running the stock price stupid high right now and setting that bar really high for Tesla, and if they miss it, it's going to come crashing down. Or if they continue to hit that bar, eventually you're going to plateau, and the stock is going to need to catch up, and the company's going to need to catch up with the fundamentals to the stock price, and then you trade sideways for a little while. So it's one of those two things naturally occurs all the time. And that's just kind of what we're waiting on right now. Yeah, Alex made life-changing money on Palantir, and that's awesome. With Palantir, I bought some shares back down at $7, sold at 16, bought back in at 12, and then bought a little bit more on the way up. I think my cost basis is just under 20 right now. But I did trim some. I trimmed some around the $80 mark. I just trimmed another one when it crossed over 100. If it passes 120, I may, actually, I don't even know where it's at today. Let's take a quick look. Palantir, I've got it somewhere on my list. Somewhere over the rainbow is Palantir, if I can find it anywhere. Wow, long list, no Palantir. 117.91. Yeah. So I'm looking at Palantir, and just with all the jumps, and actually we can take a look at Palantir's charts as well today, just because I know, no, that's another hot stock. 117. Thank you, Alex. Yeah. So, for me, if Palantir crosses 120, I'll probably trim another one off. Again, not to say that Palantir is not going to do well long term, but the problem I see with Palantir is, man, that bar, they need to be slamming numbers through. Now, granted, what's going on right now, there's some Congress people who have bought into Palantir as well, even with the run up. So, like, do they know something? Is something that's going to be going on with government contracts. Now, Palantir, the government contracts are great for Palantir. That's how they got their start. But the long term for Palantir is going to be off of a lot of the e-commerce stuff that they're doing, and helping companies on the commercial level. That's going to be the real bread and butter for Palantir in the long term, and that is growing immensely. But right now, the stock price I think is a bit frothy for where they're at. And as my dad says, remember, you don't make or lose anything until you sell. So for me, I've been selling and making massive profits on Palantir. And Tesla right now, because of the dip that it was on, actually dipped into the range where I could buy some more. I wasn't ready in my portfolio to buy anymore based upon my criteria. But if it continues to dip, and again, we'll get into those charts in a minute, if Tesla continues to dip down more after it bounced back up now, then I will absolutely be buying more Tesla. What's going on, Sal? Chicago in the house. Let's see, Alex. Yep. Capone Willie almost made 400 shares and trimmed 60 so far. Yep. I have a terrible $50 cover call contract, so I'll lose another 100 shares. Whoops, rookie mistake. Hey, it happens. And I'm going to start learning how to do some of these trades as well. And doing like the wheel strategy may not be a bad option either, because for me, it's like Palantir, I do want to hold long term. The volatility is high, which means that you're going to get paid a lot for those premiums. You do the covered call or do the cash secured put, and then a covered call wheel, and just keep on looping that same 100 shares around and around and around. And you can make some good money on that. And the worst case scenario is you get stuck with 100 shares of Palantir as it's dropping down or going up. So be it. I mean, whatever, you want those shares anyway. So trimming some Palantir recently because of tariffs and Trump's crazy moves. Yeah. I was just getting some money, some out, keeping some bullets. Yeah. That's another thing too, is right now the stock market is still continuing to go up. Looking at what we have been seeing with tariffs, the market obviously getting scared. We're in neutral territory on the fear and greed index, which we've been kind of bouncing between fear, extreme fear and neutral, haven't really pushed back up into that greed range for the last couple of months. And Tesla dipping down, looking at all of that. So, that's one of those, I'm still waiting for things to break. I don't know if they will. I mean, we just got inflation data that came in hotter than expected. There was an expectation that was going to dip down, and it actually went up. So that wasn't very good. The market didn't like it, but it turned around relatively quickly. So, it's one of those, when you see the sentiment in the market where even though we may be at neutral or fear, it seems like no matter when we get bad news, it seems to recover very quickly. It kind of concerns me. So at some point, something may crack, whether we get into a war, whatever's going on. I don't know. And when it comes to Trump, and who never knows what's going to happen with him. Now, when it comes to tariffs specifically, tariffs are basically a one-off inflation hit. Everybody has these fears about inflation is going to go up and tariffs cause inflation. And historically they do, but it's a one-time hit. So let's say, for instance, Trump does a tariff, and it sounds like the plan that he's rolling out right now is going to be it's going to go on a country-to-country basis based upon whatever their tariffs are on us. We're just going to match them and basically say, hey, if you want to tax and tariff us, we're going to do the same to you at the same amount and break it even. And then if you guys want to just call it off and call it zero tariffs, we'll just do that and make everything zero again. So that's kind of what he's doing right now on a country-to-country basis. So when it comes to each one of these, obviously there's going to be different scenarios that play out. But basically, let's say it's a 10% tariff on that, then you're going to expect goods to go up by 10%. And it's that one-time hit. It's not going to be continuous over time like we saw over the last 4 years. Government spending is what typically makes inflation go up consistently. The more the government spends, the more inflation is going to go up. The more they print money, the more inflation is going to go up. But typically when they spend money, especially when they don't have it because we're so far in debt, when they need to pass a large bill or something, they have the Fed print money for them, thereby diluting our dollar, thereby causing inflation to go up. You do that over time consistently, it causes inflation to go up higher and higher, faster and faster. So we'll see how the spending goes, with this administration. But that's the difference between inflation by tariffs and inflation by government spending. Tariffs are a one-time hit. Government spending is, as long as they're spending, inflation is going to continue going up as long as the Fed needs to continue printing money to pay for that spending. So that's the quick, simple breakdown on all of that. So when it comes to these tariffs, we'll see how it all plays out. Seems like he just kind of wants to level the playing field. So again, you tariff us, we tariff you the same amount. We're not getting into any tariff wars. It's strictly a, hey, if you want, we can make this all zero, or we'll just match whatever you're charging us. Done. So it seems like that's the way that we're going to be playing out, based upon the latest that he has told us. Yeah, Sal, the wheel strategy. I'm going to start learning that myself, and as I learn it, I'll try to teach you guys as well, or really share my learning experiences. Selling Tesla 2 is becoming too hateful by some people. Bad PR and too many tweets against some people. Yeah, and that, I'm sure that is definitely factoring into some of the negativity behind Tesla and the pull down in the stock price. I have no doubt about that. Well, actually, I'll jump into the charts in a hot second here. Easy to pick the winner of the game after it's over. Yeah, you make the best decision you can at the time. Exactly. Right now I think some of these stocks that I have are a bit fluffy, and something I've been discussing with my dad, who does a lot of the swing trading, and I don't want to not do it, but I need to do long term because long term capital gains taxes are way easier on me than short term, because I'm going to get taxed at the highest amount if I'm doing some shorter term swing trading. So I'm picking some good stocks, and I'm just making sure, hey, I want to make sure I want to hold these for the long term. But if I have them for more than a year, they seem to be running up a little bit, and maybe there's a better opportunity, I'll cash them out, take those profits, and move it into something else. So I'm kind of working on my own little longer term swing strategy style. Which yield match stocks gave the best returns of yours? Tesla or, oh man, Tesla, not so good. Actually, before we jump into the charts, I'll show you that really quick. Where did I put it? Do this. Yeah, because Tesla for me, let me see here. Oh yeah, that's all the economic. Yeah, so CPI, let me see. CPI came in at 0.5 versus a 0.3 expected, 3.0 year over year versus a 2.8. Core was a 0.4. I mean, everything was hot when it came to CPI, and even PPI came in hotter than expected. So inflation not looking good, but a lot of it may be anticipatory inflation based upon the tariffs that were coming out. So probably suggest some purchasing ahead of time. But I'll show you guys here my, let's see, the yield maxes. So all I own right now are Coney, Tesla, AMZ, and YMAX. I do own BITO, but BITO is not a yield max. So looking at my all-time total returns, Coney, I am up 311%. That is by far my best. But now Coney, I bought in at about $20, and it ran up to 30. And I sold some good chunks of Coney early on, made massive profits on Coney. And now I've just been basically riding the dividends. This can go to zero, and I would still be profitable on Coney. So very happy with that. Tesla all time, I'm down 40%. Now I did sell out of all of it and bought back in recently. So the way I track it, I can't track to see what I'm at recently on it. But yeah, down 40% on that. AMZ, I'm only up 1.87%, but I just bought into that one recently. So I have to give that a little time to breathe. And not only that, but tomorrow we get paid out. So as that pays out, that'll cause this to go up and bring that percentage up. And then YMAX, I'm up 36% on YMAX. That one's been relatively steady for me, so I'm happy about that. So I'm holding on to these. And XDTE has been relatively good for me. Pays out weekly, and I like the weekly payers. It just gives me more money faster. I don't drip any of these. All of these, I take all the cash that comes in from them and I distribute them elsewhere into my portfolio. So I'm hitting the caps. $1,000 is where I'm capping all of these for right now. So I'm not going to be adding any more unless it dips down. And once I hit 100 shares, I'm stopping entirely. This is going to be a very small portion of my portfolio, just as kind of like a steroid injection into my cash flow, because right now it's flowing $256 a month in cash. So I take that 256 and again distribute that elsewhere. Once that caps out at the $1,000 or 100 shares, then I will, just keep on taking the cash and work my way down the chain. All right, let's jump into these Tesla charts here. Mm, started doing the wheel strategy with TSLL. Oh yeah, and I mean that's so taking TSLL, which is already going to be I can't think of the term right now. Smoked after all this inventory I've been doing. But yeah, it's basically options on options. So you're just magnifying it even more. For Australians, we pay 15% taxes on dividends first, then plus more income tax rate of 20%, 20 or 39%. Yeah. So, I mean, I would say we're sort of similar here. So, depending on how much you make, up to I believe it's 46 or $48,000 for long-term capital gains or qualified dividends, you pay $0. $0 you're going to pay in taxes. Um, After that, then you start going into different tax brackets. Could be 15%, could be 20%. Then it's all based upon how much you make in a year. And I think 15% is pretty much the most, unless you're making, I think it was like $350,000 a year. You're going to be at the 15% tax bracket for anything over that amount. But unfortunately for me, a lot of my dividends right now are just taxed as ordinary income. So all the yield max are ordinary income. Like JEPQ, JEPY, a lot of the covered call ETFs, all of those are ordinary income. So I'm paying higher taxes on those to kind of get the speed going on my portfolio. But my long-term plan is to have all like qualified dividends, ETFs that are going to be qualified dividends, companies that are qualified dividends. The only things I will have that are not are going to be REITs, BDCs, and MLPs. And even then, it's going to be less than a third of the income coming in for my dividends. But that's just the higher dollar amount stuff. And I figure at that point, I'm going to be utilizing that as something to live off of because I plan on, weaning myself off of work, going to part time. And as my income comes down, that means that getting taxed at an ordinary income rate is going to bring the taxes down on what I bring in from those dividends anyway. So I'm trying to work out the different tax minutia of all of this to smooth it out. So I'm paying as little in taxes as possible, especially as I get closer to retirement. Any stocks I'm looking to add in the near future? As of right now, no. As I was talking with my dad, I'm still in consolidation phase. I still have my eyes open. If there's an opportunity for something, I'll jump into it. Um, S&P Global SPGI is one that I've had my eye on for a while. The dividend growth rate is amazing on it. I'm really focused on some dividend growth companies because typically when you're looking at a high dividend growth company, they're also a great growth company as well. So things like Visa, MasterCard, American Express, those three are some of my favorites. They grow very well and have, very high growth rates. The yield is lower, but you're going to get great growth and dividend growth over the long term. And if you think about how things like a Coca-Cola back in the beginning was doing something very similar and then eventually hit that plateau where it's just a nice steady growth on top of it, but because you accumulated so many shares early on, you got all that growth rate early on, all that compounding early on. When you hit that flat part, even if you're only taking in, a 6%, growth rate year over year when it comes to dividend growth, it doesn't matter because you've already got the compounding behind you. So even that 6% is going to make a huge difference at the end of the day. Costco is another one that's awesome like that. I've got that. So that's kind of what I'm looking at. So stocks like that, I just sold out of Pepsi. I don't know if I'm going to buy back into it because I like SCHD. I just started picking up SCHG in my IRA because looking at the IRA, I was like, man, I really can't access it till I'm 59 and a half. So I was like, if I've got 14 years of growth still going to come into my IRA, I'll let it be growth because I'm not going to get taxed on it. So I would love to have dividends in there, and I've got SCHD in there. But realistically, sure, I'm not going to get taxed on those dividends, but the growth rate is going to be a lot higher for an SCHG, and I'll make even more money on it for a total return basis. And then when I cash that out at that point, when I do want that more income coming in, I'll have more money in there to be able to put into things like SCHD or any of those higher income driving plays. But otherwise, not looking to add anything else. I mean, adding to the current positions that I have is really about it. I'm going to be adding back to Tesla. I'm going to be adding more SoFi to my my portfolio. And those two are the two that I have, two of the four that I have that don't pay any dividends. Amazon's another one. I have a feeling Amazon within the next 2 to 3 years is definitely going to pay dividends. I would imagine Tesla is going to end up paying dividends in the next decade. I think SoFi and Palantir will also end up paying dividends in the future. Could be longer than 10 years for the both of those, but I think all four will eventually pay dividends. And that's part of why I like them right now is I love the companies, all four of them, and I just want to add to it. And then if they get to dividends later on, it'll be a nice little bonus. And yeah, and Costco, as my dad says, Costco has a history of paying special dividends regularly. And one year was like $17 per share that they were paying in a special dividend. So I think they're going to end up splitting soon as well. They crossed $1,000 recently. I have no doubt Costco is going to end up splitting very soon. So I love them. And, they always trade at a premium. A lot of people keep on saying that eventually Costco is going to end up crashing down. They traded a forward PE that's higher than NVIDIA, which is completely wild. But, when you're going to be paying out special dividends, on a regular basis with that amount, people want the stock, and they have basically something like a Netflix style income generation that's coming in with their Costco memberships. And they keep on growing year over year around the world. And they've got that subscription that keeps on growing. So that's huge for them. All right, let's jump into the charts really quick and we'll take a look. And if there's anything else you guys want to see, I'm going to do Tesla and Palantir real quick. Palantir I'll jump into first because Tesla will take a little more time on. Let me just make sure this is all good. All right, cool. Meta did just, thank you, Alex. I've been waiting to see. I knew Meta was going to end up going up on their dividend. I knew it. But I'm shocked that they only did 5%. I know Google is going to end up going up on theirs as well. So maybe they're just doing 5% because they're using capital. Now, granted, Meta as a growth company with AI coming out, as an investor, you would rather them be investing their money back into the business to grow it than paying out dividends. So this point of the game, I'm totally cool with Meta doing that. I figured they'd be going up on it soon though. And I have no doubt Google, I think it might be June. Can't remember when their 1 year is for Google, but I have no doubt they're going to go up on it as well. I'm actually curious as to what NVIDIA is going to do because NVIDIA was up 150% on theirs. Now, they pay a very paltry little tiny dividend. So going up 150% really didn't make a difference. They may go up another 100% and go from 10 cents to 20 cents in dividends. I wouldn't be surprised if NVIDIA did that. Yeah, Costco's always packed. My dad, Costco will crash when the $1.50 hot dog goes up. He's not wrong. I have no doubt. As soon as that happens, it's done. But I would imagine that the owner, I can't remember what his name is, but I have no doubt that he will have it in his will that the hot dog will remain at $1.50 forever. All right, sorry, we'll jump into Palantir. So Palantir right now, hit a high of 118.66, closed today at 117.91. Just keeps on running. Whenever people think that it's going to come crashing down, just keeps on running. A lot of people were thinking around $80, which is when I sold a couple of mine. I thought for sure it was going to dip back down, and it did into the 60s, and then ran back up again. But to take a quick look at gaps on Palantir, man, a gap down to 84.25. You've got gap down here to 58.48. Another one at 51. Another one at 42. Another gap down at 31. Another one at 24. Another gap at 20.99. Let me see. Then you've got this giant gap down at 17.87 and another gap down at 14.96. So looking at these gaps, I think there's another one that goes down to $10. Yeah, or down here at 7.86. So remember, gaps fill 9 out of 10 times. They're not guaranteed. They don't have to fill. But knowing how frothy this is, their forward PE or their PE ratio forecast is 380. 380. That is 380 years of price built into this. So that to me tells me that it's extremely overvalued. So even if you took that down, 10x, that brings it down to a 38, which is maybe a little more reasonable. Let's say you did a 5x. Let's say you bring it down to a 72. You cut this price in by 5, you're now looking at about, a $25 price tag on this. That means that you would fill this gap down to that $24 mark. So if you brought it down to a PE of 72, you're down at 24 bucks. That fills the majority of those gaps. Maybe we never come back down and fill this gap here at the 786. But there's 1, 2, 3, 4, 5, 6, 7, 8, 9 gaps right now. And a lot of them are massive. RSI is at 78. We're in the overbought range. So chances are we are going to be selling off and cooling off a little bit, at least from these levels. Now, again, I don't know when. I don't know how far we're going to go. That is not anything I can ever predict. So for me, I just take a look and say, hey, this is what I see. I'm profitable on it right now. I don't think that they're going to be able to run that more. I don't know if they will, but I want to take my profits in case it does come crashing down. And I'm still going to buy it. So if it does come crashing down further, I'll buy more. So at this point here, if I sell one at 120, if it gets to that point, if it ends up pulling down to that $60 range, I'll be buying back in. Now, I just by buying a little bit, but I'd be probably buying one share at 60 bucks. And what I'm also doing on this, because it's run so much, is the shares that I'm selling when I do sell are the highest cost basis for me. So it's going to lower my cost basis. So God forbid we do end up come crashing down to maybe that $15 range. I'll still be profitable on those shares because I sold the higher valued ones. Plus, it means I'm going to take less profits and pay less taxes as well. Let's see. Alex, those gaps aren't filling for sure. Pella will never be 20. Alex, that exact sentiment is what we all talked about with Tesla when we said we were never going to go below $1,000. We were never going to fill that gap at 245. We were never going to fill that gap at 140. We were never going to get down to $100. Sure as shit, we did every single one of those things. So, that is the exact same mentality that we heard from Tesla. So that is exactly why I still have my conservative, cautious mentality of it could always come down. Never say never. Straight to 200. Hey, if it gets to 200, cool, man. I mean, again, there's a lot of people make a lot of money, but the higher they go, the further they fall. So just be cautious about that. Sell a kidney at 60 bucks. See, for me, 60 is still overpriced for Palantir. If my portfolio is growing and I want to buy a share at 60, I'll see where the market's at. Cool. But yeah. And again, I don't think there's anything wrong with Palantir. I just think that there's a lot of future growth already priced into it. And I don't know if they're going to bring in the money necessary to meet these numbers anytime in the next few years. All right, let's jump over to Tesla and take a look at Tesla. Where is it at? There we go. So Tesla, if you guys watched my video the other day, we were, this is where we had been coming down. So I made the video on Sunday, so I didn't even see Mondays. I didn't have Mondays in there, but we were sitting here right at this level at about the 365-ish level. And I was like, hey, we've been coming down. I've been talking about this dead cat bounce that we've been on. And I kept on saying, hey, check those for higher highs and higher lows because we've been making lower highs and lower lows. Sure enough, we made a higher low and a higher high. And I was like, okay, but now we need to continue that trend. And we broke down and did not continue it. So now we continue bouncing down. And that's going to be the next thing I want to see is, can we make higher highs and higher lows? So right now we've got this low down here. I have so many markers, I won't even catch it. Low down here in the low 320, 330 mark. So right around that range, we've got it. And, that's what I'm paying attention to now is we're going to come up. So then the high we need to pass is going to be here, is about that 410 mark. So I was saying the other day, I think we're going to come up. We have a potential to come up and fill this gap at 394. We had a gap at 354 and a gap at 348. We filled both of them. Actually, we jumped past the one at 348 and created another gap at 345 on the way back up and filled that one today. So there's no more gaps in this range. And my thought was, are we going to come down and fill this gap at 324? But right here at that 326 level, we have a very strong support. And so we bounced off of that support and then bounced up from there. And you saw it over here, it was a strong resistance. So this level here has been that 326. So we didn't break below it to fill that gap. Now we go back up. So are we going to end up clearing and filling 394 and pushing past it to over 400? Or are we going to bounce back down further and come back down and test that 326 again to fill that gap at 324? My personal feeling is if we don't cross this gap at 394, we're going to come down and we're going to fill these. We may fill 394 and then come down. I really don't know what's going to happen over the next couple of months, but I do think we end up coming down to fill that gap at 218. I think part of that is going to come from obviously the sentiment around what Elon has been doing and saying, pissing a lot of people off. I think it's going to come from just what's going to end up happening with a lot of the Trump stuff that has been going on, decisions he's been making, and some of these things like the tariffs starting to actually take effect. And the market just kind of feeling it out, and just that uncertainty probably pulling themselves out, causing everything to come down. And then, the Model Q coming out. Is the Model Q going to actually come out on time? What's the price going to be? Is the EV tax credit still going to be there? Where are we at with FSD? Are we actually going to be having the robo-taxis by Tesla going around Austin come June? Or is that going to get delayed as well? I think a lot of that has been built into this price right here. If we do not get any of that stuff to come to fruition, or if Elon continues to piss off everyone out there, then this could definitely come down and continue bouncing to fill that 218 gap, get us right back to where we were right before Q3 earnings of last year. So I definitely think, because I think a lot of this was a fluff bubble that came in based on sentiment after the election. So I think the 255 gap is a no-brainer to come down and fill. Filling the 218 is going to be based upon what sentiment at the time. Because if we come down to 255, there's going to be a lot of people who maybe bought in at these peak levels here. They're going to be pushing themselves down about 50%. So there's going to be some frustration in the market, and you could be hearing a lot of more bad sentiment coming out. And that could end up driving it down further down to that 218 level. So just a lot of things there going on. And again, the PE for Tesla has pushed up stupid high as well to almost 135. So yes, Tesla has amazing things in the pipeline that are being worked on. I do think they are all going to come to fruition. But even at the best case scenario, most of it isn't going to become to a real life fruition when it comes to revenue generation coming in until 2027. That's 2 years away. So there's a lot of this price built in. And I was saying it before, I think this price here at 488, around 500, is probably a realistic intrinsic value price for Tesla come the end of 2026. So we've got basically 2 years built into the stock price right now. So as I said before, we're either going to see it pull down to realistic levels, or it's going to end up trading sideways for a while, which could end up looking like some of this up and down bouncing volatility, and trade sideways for a while. It's happened before. It'll happen again. That's just how Tesla has been trading, and they will continue to trade as they continue to come out with more revolutionary stuff. Now, obviously, the revolutionary stuff hasn't fully come to fruition yet, but they are getting there. Let's see. Let me see. Palantir, yeah, it's expensive as hell, but I think it'll grow into its value sooner than later. I think it will. I think that 380 is, I don't think it's unrealistic for to say like a 10-year, or 380, sorry, 117. 117, I think maybe a realistic price target for, let's say, 2027, 2028. But, there's a lot that they need to actually accomplish in the meantime. If they have that, like a 3-year run like Tesla had when it comes to their growth, I think we could see that. But then I would still think that we would see the price pull down. Let me see. Lang, what do you think of Hood, RKLB, and ASML? 218 or less than 250 Tesla, I will bore. Yeah. Yeah, and for me, Tesla right now, my buy level, just based upon my portfolio strategy, is under 350. It's starting to be an ad, but it's like small dollar amounts, so not full shares at all under 350. Just some small dollar amounts at that point. So 218 would be actually at the level at 218. It would be buying a full share at 218. But let me see. Robinhood. Here's my thing. I think Robinhood is going to end up being perfectly fine and successful. I think there's a lot of anybody who didn't get pissed off from the GameStop stuff. Robinhood is a very gamified type app and very easy to purchase and sell stocks and make trades on the platform. Super easy. Um, so because of the way they set up, I think they're set up for success. And obviously them getting into potential betting and things like that on sporting events, that could be another revenue generator for them. Um, and cryptocurrency. Actually, that's the only place I do my cryptocurrency trading. They do, last I had seen, have the cheapest cryptocurrency trades. When you're buying it, there's never the same price. You're going to get charged something on the back end somewhere, so you may not always be getting the best price. But for most of the platforms that have been tested, Robinhood is one of the best. So I've just kept with that. But it's only cryptocurrency for me. So as a company, I think they're going to be fine. I know their stock has run up significantly, but I think they got beat down more than they should have. So valuation wise, I'd have to look at their numbers to really give my true opinion on it. But I think actually, let me take a look. I could actually take a look at some quick numbers here. So if we're looking at Robinhood, let me pop it up for you. Yeah, so Robinhood, 63.80, massive gaps for them as well. And I mean, like almost market wide, there's a ton of gaps just because of what has happened over the last couple of years. Two basically almost 25% back to back years in gains is completely insane. So to think that we're going to get a third one, now it's never happened before. So not to say it couldn't happen, but I think realistically, we are not going to see a move in the market of over 20%. If we see a move up, it'll probably be maybe like 10% this year. I do think we're going to see a rough second half of the year, though. So I do think we are going to end up dipping down this year. And any gains we get are going to be either what's remaining from the first part of the year or like a little Santa Claus rally at the end of the year. But looking at Hood here, massive gaps, 56, 39, 32, 30, 25. I had Robinhood, back around that $10 range, and I made some money on it, sold it out. But for me, I wanted something that was more secure, so I ended up going with SoFi for my type of play like that. But I mean, even looking, PE forecast for them is 56, so it's not terrible. But there's a lot of things that they need to do. Like what differentiates them from SoFi is a bank as well. So you're getting a lot more as far as investing opportunities and wealth building when it comes to SoFi. Robinhood is very much just a trading platform, and that's it. So huge differences between the two. Let me see. Oh, sorry. ASML. I think ASML is going to be perfectly fine. I think they went through a rough patch, and I think they're going to be perfectly fine going forward. And obviously, AI isn't going anywhere. If anything, it's going to be growing. It's just going to be a matter of when are we going to see a return on the investment from the AI that's been going on. So until we end up seeing that return on the investment, a lot of these companies already have the chips that they want to buy. Obviously, there's still plenty more to be purchased out there, but until these companies start to see the return on that investment, they may not look at and upgrading their equipment, because why would they upgrade something that hasn't provided them any revenue yet? So I think there could be a bit of a wall depending on when AI really takes off. It's very similar to like the dot-com bubble where the internet came out, and obviously you knew that the internet was going to be a game changer. You just didn't know how it was going to work out, when it was going to work out, and all the different things until people were actually using it. Same thing is going to play out when it comes to AI. It took a long time for a lot of the internet companies to actually make any money on them. Then they started learning, ad revenue on the internet, more people using it. So I think AI is going to be very similar. Is it's going to take some time to understand how people are going to be generating revenue from AI and or saving money by using AI before we really see that start to play out. Let me see. Tesla China January deliveries were pretty bad too, weren't they? They were. Tesla deliveries in January, I think globally, were not very good. And don't forget, interest rates staying higher for longer. And Trump did say they're coming down. I know they're going to come down, but based upon inflation, continuing to go up, instead of coming down, we may not see interest rates coming down again until June. And if that's the case, then we're going to be in a place where, it's still going to be difficult to purchase the vehicles. That's why we saw Tesla struggling when it came to deliveries, is because interest rates were high. So if interest rates are, still going to stay higher, Tesla's still going to have that challenge. Looking at the legacy automotive makers, they're going to face the same challenge. They're already anticipating a rough year this year. So I think this year, Tesla hitting 2 million vehicles getting delivered is going to be a challenge for them. So they might be able to do it depending on how quickly they get out Model Q. But I think that's going to be a lot of dependent. And it's also going to depend on the EV tax credit. If they lose the EV tax credit, I can almost guarantee you they're not going to hit 2 million this year. Yeah, even the live shows Google puts in their ads. Yeah. And I didn't realize that. I haven't watched anything really live. So thanks for that feedback. Because I try. So as a YouTube content creator, for you guys who don't know the behind the scenes stuff, when it comes to the ads, I have choices now. I can either kind of do my own custom and determine where they're going to play out, or go by what Google recommends, and they play it intermittently throughout the broadcasts or throughout your videos when you post them. And you can set it at three different levels. There's conservative, which is very few videos, very few ads. There's moderate, which is just normal, which is what you guys see from me. And then there's aggressive, which is just playing a lot more ads. Now, for a content creator, that could generate more revenue, but then are you driving away your audience by having too many commercials in there? And I didn't even know that they were playing mid-reel with live streams. I thought when it came to live streams, you'd see a video before you jumped on, and that would be it. And then anybody watching it later on as a replay would then catch normal ads. So I was unaware of that. So thank you for that feedback. And again, I don't do this for the money. I make very little from YouTube now. I used to make more a couple of years ago when I was doing 2 videos a day and burning myself out. Now I'm just enjoying it. Love spending time with you guys. So, I don't get a lot of views on my videos like I used to, barely hitting a few hundred these days. Don't really care. So I'm not going to be chucking in a ton of ads. So if you guys happen to see more ads out there, it's strictly because that's just the algorithm that Google and YouTube have been doing. But I'm just trying to keep it moderate and, bring in a few extra dollars so that I can invest it, but also, let you guys be on here and not have to be bogged down by as many ads, because it drives me nuts, especially with all the other platforms out there. You've got Netflix and Disney Plus and Prime. You used to pay for the service so that you can watch movies ad free. Now you have to pay extra on top of what you're already paying to see them ad free. Drives me nuts. Kind of makes me want to just get rid of. All I have is Prime and Disney, but with the Disney was $2 more a month to get Hulu. So I've got those. I do them all with ads. Prime is no ads. Well, I think it's a couple that play, but not a lot. But otherwise, it's like we're basically getting back to what cable TV used to be and is now. It's just so many ads. You don't get to watch much of the show or whatever you're watching, and there's just ads and ads and ads. So I've been contemplating getting rid of them. Let's see. I think Hood potentially has legs to run over $1 billion in revenue last quarter. OpEx declining. Yeah, I mean, Robinhood. Again, I think they're going to be perfectly fine long term. Just not one I want to get into, and I don't trust Vlad. He's like he's such to me just such a greaseball, especially after everything that happened with GameStop, and he wasn't answering things openly. I don't trust the guy. I'll trust him enough to use his platform for my cryptocurrency. But yeah, I don't like him. So as far as owning the company, not a huge fan. I try not to buy or not buy or invest in companies strictly based on the behavior of their CEOs. I try to look at how their CEOs move their company forward. And when I see somebody who I think may potentially be doing some immoral stuff behind the scenes to maybe keep the company afloat, it makes me question. So, yeah, as my dad told me this morning too, Robinhood's going to get into legalized gambling. My bad, predictive marketing. That is what Vlad is calling it. Yeah. Uh, let's see. Fed rate reversing go up. Inflation caused by tariff wars against China and globally. I don't think they're going to go up. I mean, there's still a lot of cushion when it comes to the interest rates. They're sitting around that 4.5% range, and inflation is still at 3. So there's still a pretty decent cushion. The Fed wants to be just a little bit above inflation, but until they can consistently see that inflation coming down, they're going to keep these elevated where they're at just to kind of keep that pressure on. So I don't think that they're going to go up on the rates, because if they went up on the rates, the market would absolutely lose it. You do that and market crashes. And that is one thing that Trump doesn't want. That's one thing that Jerome Powell doesn't want. Don't forget, Jerome Powell is basically retiring, I think, next May. So about a year and a few months from now, he's going to be retiring. Trump's already had the discussion about removing him. He refuses to leave. Trump can't remove him, at least not legally. So chances are he's going to be around, and he wants to make sure he's got a good legacy. He doesn't want to go out on a bad foot. And going back up on interest rates is not going to do that for him. It's going to be an ugly legacy for him. So they're going to be at the point right now where they're going to keep them higher to make sure that inflation is squashed. And so that just could cause a little bit more of this struggling when it comes to companies like Tesla. Short and easy to skip. Okay, that's good. So as long as the ads are short and easy to skip, then that's good. So many ads on YouTube videos, dude. It is bad. Like, even the creators that I watch, they're not awful, but I could definitely tell that there's like one or two more ads in there, or it could be like a double ad, and the first one's not skippable, and the second one is. Yeah, that's why I hard to sell with Palantir. Alex covers my favorite CEOs. I love Alex. Such a good, genuine dude. He is one of the reasons why they have the same, similar following type to Elon. You know, just you could tell he's different, different in a good way, and I agree. But no different than Tesla. You know, as awesome as he is, and as much as he's one of my favorite CEOs, also, it's still going to be realistic pricing when it comes to the stock, because Wall Street inevitably is going to be looking out 12 months and says, well, where should we be? And that's it. Will Jay Powell be fired? No, he won't be. Trump can't do it. So, with Doge coming in and looking to audit the IRS, which apparently they're already starting to do, which is wild. And then, looking to go in and audit the Fed as well. I don't know how that's all going to transpire. But again, when it comes to the actual who's in charge of Jerome Powell, is this something that Trump can remove? He's not somebody Trump can remove. He's not somebody he can do an executive order to get rid of. He cannot do it. It's impossible. So as it looks right now, Jerome Powell is going to be sticking around. I'm sure there's going to be a lot of pressure coming from Trump to come down on rates, but until we get data that shows us, I wouldn't even feel comfortable with them coming down on them yet. Inflation usually higher this time of year because most companies institute their price hikes beginning of the year. Actually, that's a good point, and I think somebody else was pointing out as well that inflation last year was, I want to say it was coming down at this point. So we were probably going to be expecting a little bit higher year over year number, just because we're going up against a lower number last year. But I don't know. So yeah, and again, it's the trending. But typically, if the market is expecting lower numbers, they factor that in. I don't know. Many more politicians' ads are appealing on. Yeah, the election is getting close, closer. Oh, okay. Oh, that's right, Australia. Yeah, the political ads, man. And then, of course, if you've got it set up where your phone can hear what you're saying, they're going to play ads based upon what you're talking about. Yeah, wild. Alex, got to run over his incredible blessing. Have a good one, Alex. It's great to see you. And I'm going to be jumping off in a minute as well. I just need to relax from all the work that we've been doing. But yeah, so overall, CPI hot, PPI hot, market, still up, which is wild to me that, the market, again, it's handling these things very well. And I want to say it's kind of a little concerning because you look back at like the housing market crash, and there were a lot of signs out there that things were cracking. And anytime you saw a little crack, the market would dip down, but then recovered right back up as if, it was impossible to break until it finally broke. And that's kind of where I'm at right now is I just have that gut feeling that something is going on and something is going to break, and I don't know what's going to cause it. Um, you've got something like this. It was bird flu very bad many places in the US. Bird flu has been spreading around here, causing the price of our eggs to go up significantly. Um, so there's a lot of concern about that that's going around. But what is it that's going to cause that break? Looking at the underlying fundamentals and foundations of the economy right now, consumer debt is at an all time high and keeps on going up. Eventually, there's going to hit a wall. What happens when you hit a wall and consumers don't have any more credit to spend? Then you're going to see some revenue coming in from these companies slowing down because consumers can't buy anymore. And that's kind of like the reverse of the food chain is when you lose, all the bugs go away and you don't have any rain for a while. Then the next things up, like the frogs and stuff that are eating the bugs, there aren't going to be as many of those. When you lose your food supply, the ecosystem starts to shrink. And so it's going to be something very similar to this. If your consumers have no more money to spend, there's no more food to give out to the small businesses and the companies that are out there taking in that revenue. So that consumer revenue is not coming in. Now they don't have as much money coming in to buy things to grow their company and grow their business, which means that the ones who are producing the stuff that help those companies grow their business are now going to lose the revenue coming in as well. And then you start to see all the earnings kind of leveling off and coming down because the consumers don't have any money. And eventually that needs to come down and hit a point where you have more money coming back in. That to me, I think is the most realistic point we're going to hit. So again, if inflation does continue to go up, or even we get that tariff inflation spike that jumps in, that might be enough to break consumers. Are eggs going to be enough to do it? I don't know. But if you start seeing other things, oil prices have been still relatively low. If for some reason oil prices start to skyrocket, then you're going to see everything go up in price. You've got inflation coming back, then you're going to see some bigger problems. So that's just where I'm at. And again, I continue to add, I'm not going to stay out of the stock market at all. I just want 12.5% cash on the sidelines, some stops put into some other companies as well that I own. So if we do get a pullback, I'll free up some more cash. I've got all the dividend plays right now, bringing in over $500 a month in cash for me to be able to distribute and spend. That's my strategy right now, is to continue growing and then making sure I've got the cash flow and cash on the sidelines. So in case we end up getting a big sell-off, I will be able to take advantage of that opportunity. And that's just the way I've been playing it. And I'm going to continue to play it because to me, that is just basic investing, is always being ready and agile to take advantage of those opportunities. But yeah, good that we can buy all EVs from China without high tariffs. Yeah. So, and again, over there in Australia, you've got the proximity to China. And of course, China is, the one that's going to be shipping over there to you guys. And that's great. So that keeps the prices down, even though they're already going to be higher to begin with, but they'll keep the prices down for you guys. All right, that's all I've got for you guys tonight, though. My throat and voice are starting to go. I got to go get myself some rest. Yep, DCA. I do my modified DCA, and I'll go over that next week on the live stream, or when I'm on the live stream next. I'll go over and share with you guys my modified DCA to kind of maximize those returns. All right, guys, have a great one. It was awesome as always with you guys. Glad I was able to get on and chat with you. And I will see you guys again. I'll keep you posted about next week if I'll be able to get on or not, and I'll let you know. Otherwise, hope you guys have a great weekend.